Welcome to the session, everybody. It's great to have you all back. I will tell you now, I have missed you all thoroughly. I've missed analyzing the charts, I've missed the markets, I've missed the questions, I've missed the busyness in the group and everything else. Now, this year, 2021, I believe is going to be the best year of my life. And if it's going to be the best year of my life, then I believe it's going to be the best year for a lot of yours as well. Now, the rest has been well deserved, to be honest with you. I know we said we're going to be doing a lot of live sessions, etc., etc. I hadn't followed through with that plan, which is life. It does happen. But I was saying to my wife yesterday, the 4 or 5 days that I haven't been in the doing live sessions on the charts or focusing about trading has given me a lot of time to think and reflect about a lot of things here. I have made some drastic changes and yeah, some really big changes. So very excited to be able to share that journey with you moving forward this year. Now, to be honest with you, it has seemed like the longest time ever. I feel like I've taken a 6-week holiday break, but I guess that's just simply because we've been super active in 2020. And I was saying to a few people in terms of my work ethic, where do I think I'm at in 2020? Well, personally, I believe that I worked to 34% of my capacity due to just things that were surrounding me in terms of family, in terms of my own health, my own lifestyle. And I'm very excited that I was able to achieve as much as I had achieved last year. But I do feel that there's a lot more that I have to give without overworking myself and also being more productive. And I'm really, again, excited to be able to go through that journey with every single one of you and everybody else that is part of the community and those that follow the Rocks FX Academy movement. Now, I hope some of you have been able to enjoy your time as well. You are well rested. You've had time to think about a few things, evaluate your why, reflect, and enjoy your family time, because that's very important. And to be honest with you, that's one thing that I have realized over the last week or so, the importance of health and not sacrificing health for business or trading or whatever else it may be. So they're just a few things that I've been able to enjoy, as well as family time, sorting out my lifestyle, planning for my future, changing a few things around me, like I said, which you guys will be definitely a part of, because I'm going to make sure that I involve you in this. And yes, that is that. So plans for 2021, just very briefly, I'm not going to go over this in too much detail. We'll continue this conversation another time. But obviously, you know the changes to the schedule. I have made quite a few changes. And as I said, when you run a business and you have a lot of people to oversee, and you know everybody needs a different, people's requirements need different attention. You know, you make decisions to make changes, and then, you know, a couple of days later, a week later, you may have to make changes again. Now, that's just life. It doesn't mean that I'm not, you know, trying to be consistent here, or I'm lacking in my ability to organize myself. It just is life. And as you probably will all know, as traders yourself, we're constantly having to adapt and change. Okay. So my responsibility, I believe, is to make sure that I meet everybody's needs to the best of my ability. And the schedule change was cutting back a little bit. Now, I have thought about this thoroughly. Again, I'll go through a schedule with you in Slack another time, well, probably closer today. But personally, I will be cutting back in terms of the non-necessities, yes. And I'll be focusing more on what's important. And what you can expect is more support from me. Now, when I say more support, I don't believe I was lacking in supporting you. But obviously, with the fast growth of the community, there was a lot of common questions that were, you know, cropping up a lot of the time. And we were answering those questions, myself, members of the community, and the mentors. But I could have been more efficient with that by at least doing a 5 or 10 minute recording of that question, so that answer is answered for everybody, so that we don't have these questions popping up all the time. In terms of support, that's where I was at. In terms of this year, my focus is going to be more focused on each individual's need. Now, that doesn't mean one-on-one time all of the time, because it's very impossible for me to manage so many members one-on-one. But what it would mean is me finding common themes within the community that you guys may be facing, and then addressing it in a more elaborate way. Questions like, what does ROX mean by 4H candle close with two 1H candle rejections? Should we look for those two 1 hour rejections in the 4 hour candle close itself or the new 4 hour candle open? Now, for some of you, or a lot of you, you may know the answer to that question, but for some may not. Now, there's a lot of elements to that question that could be answered that would also help you with other aspects of your trading that I think if I addressed in a more thorough way, would be able to help your growth. So that's just an example there. Now, detailed plans, as far as I'm concerned, when it comes to trading, to be honest with you, trading is super simple, okay? Technical, the technical aspect of trading, super simple. Now, there's so many different strategies out there and they all work, and I'll never bash any single one of them, no matter if you trade a 1-to-1 risk reward ratio, maybe you're a breakout trader using supply and demand, they all work in their own way. But there's different aspects to a strategy that need to be really focused on, people need to zero in on in order to make them work. And that aspect of trading is more psychological and dealing with the emotional aspects, okay? Now, it's very easy to say to somebody, trade with a trend, but if you don't know how to undo what you've had to go through for the past year, 2 years, or 3 years in terms of the trauma of trying to trade with the trend and not being able to make it work, then a simple direction or a simple plan such as trade with the trend, once price break structure, look for a lower high and then continuation, can be very difficult for a lot of people, which I fully understand. Those mental barriers that traders face have been built up through whatever they have gone through the duration of trading, whatever strategy they've learned, or whatever misinterpretation that they have gathered from whatever they have learned, okay? So for me, in 2021, I'm really going to be focusing on detailed plans to help you all unravel certain things that you're really struggling with and really provide clear direction so that we can all not only help each other, but help ourselves to get over some of the more common obstacles that you may be facing that may be very simple, but you still don't know how to overcome them. So that's definitely going to be one of my focuses. Another focus that I'm going to be really working on next year is laser direction. Now, there's steps to any process that you do. If you buy a bookshelf from IKEA, you can't expect to open the box and the bookshelf just automatically spring together and then now you can put your books on it. You have to start with step 1 and work your way all the way to step 5, 10, 11, or 12. You can't skip a step, because if you skip a step, then you're not going to be able to get a shelf up later on down the line. And I think that's what a lot of traders are doing right now. Because of social media, because of their circumstances, maybe with debt, job issues, losing a lot of money, whatever pressures they may have, traders believe that it's as simple as coming into this business, learning a strategy, and then being able to, let's say, get an FTMO funded account and then make a lot of money. It really doesn't work like that. And to be brutally honest with you, even if you're able to get an FTMO account and you've only been trading 3 months, it doesn't necessarily mean that you're going to be able to trade that account consistently and profitably in a disciplined and systematic manner for a period of time that's going to be sustainable. It is just impossible. Just in life, just as you have to learn to make £10, you have to learn to make 100, and 100 you have to make 200, 200 you have to make 400. Is it repeatable? Can you scale? Absolutely, but you need to know how to do it. So in 2021, my focus is going to be helping you to have laser direction and understand how you can go from being a trader that learns a strategy, back testing a strategy, forward testing a strategy, and then applying it in the live markets. What to expect, how to deal with these expectations or whatever circumstances you may face, etc., etc. That's going to be my focus. Now, there's so much more I have planned for 2021 because this is recorded and this will be posted on YouTube. I'm not going to delve too much into these details on this recording, but I will be able to talk to you all about it in the next week or two. And as I said, there's a lot of exciting things to come. So that's that from me. Let's focus on the analysis for next week, just so that you know there is a lot of news, which is a very good sign that the markets will be opening again. There will be a lot of movement, a lot of volume, a lot of volatility, and that's what we strive for. That's what we really want as traders, so we can get into the trades and that we're looking for as part of our strategy. I'm not going to go through all of this because there's really a lot of news, but the ones you need to be looking out for on Monday. Monday's a bank holiday, I heard, but I'm not sure if the markets are open. But according to this, they may be. Not sure. We'll find out. But we have the OPEC meetings. They don't usually affect the markets too much, but they can. So just be wary of that. Tuesday, in terms of red folder news, we should be all right. Nothing scheduled here. Wednesday, we have news for the pound around 2 p.m. So those trading under the accounts, be wary of this. And those trading the pound, be wary of this as well. Later on that evening, 7 p.m., we have USD news, which in theory, all of us should be out of the markets by then. And if you're not, just be wary of that. Thursday looks okay. And then obviously Friday, what do we have? NFP. So look out for that also. Now, before we get on, does anybody have any questions with anything I've just mentioned here? If not, let's call forward Charlie to take a look at the first pair. In terms of the pairs we're going to be looking at today, I think I'm going to be focusing on pound USD, euro USD. We'll think we'll drop euro pound for now, just for today. Let's revisit this tomorrow or something. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Let's drop gold for now. Let's drop Aussie dollar, USD Swiss franc, and these. Let's focus on these 10 pairs today. Tomorrow, we'll be back on live again. And we'll take a look at these pairs and see what the market's doing in terms of the gaps and that. All right. So Charlie, when you're ready, if you want to come forward, just 1 second. What are the plans about the live trading floor on the daily pre-London calls and setups watch list? What are the plans about the live trading floor and the daily pre-London calls and setups? So Umar was still going to be doing the live trading floor. The daily pre-London calls and setups will still be going on. As I did mention, with the schedule changes, I did plan to cut back to focus on some of the other things, but I have made drastic changes to my situation, and I will be able to continue on with those live sessions. In terms of the live trading, I'm going to update all of you off of this call probably tomorrow, okay? But in terms of the daily pre-London calls and setups and watch list, you can expect that on the days that we have been doing them. So Charlie, the days that we have been doing previously, which is Sunday, Tuesday, Wednesday, Thursday. And then, as I said, there will be more live sessions that we will be doing around that as well, but they will be for different things, okay? So Charlie, how are you doing, bro?
Yeah, I'm here. I'm good. Happy New Year, everyone.
Thank you. Happy New Year to you. What pair would you like, Charlie?
It doesn't matter, really.
Mm-hmm. All right.
I could do one that's on the screen.
If you can annotate this one for us, that'd be fantastic.
Yeah, I'm going left to right?
Yeah. So what you will notice is a change in my screen size here. I'm just temporarily on a laptop, and tomorrow I'll be back on my bigger screens. So for now, just work with what's in front of you, please.
Okay. So what I'm seeing here is this is by structure of this being a higher high and a lower high, and then it breaks this high.
Are you annotating, Charlie?
Yeah, I am.
Oh yeah, I can see it. All right, carry on.
So it creates a higher high here, and it pulls back and actually retests this level. So now from here, I'll be expecting a higher high. However, it doesn't make that higher high, so this could be a potential lower high, and it pulls back and actually creates a double bottom.
Are you drawing from left to right?
Yeah, I am.
So do me a favor, Charlie. Let's focus just our attention. I know where you got confused there. That was my fault because I didn't make it clear. Let's focus our attention on the current structure for what we'll be looking for moving forward into next week, if you can gather that.
Okay, so basically, just tell me, so I'm looking from like around this point?
Yeah, correct. Thank you.
Okay, so the market, but at this area here, the market opened with a gap and it pushed down, and then it made a lower high, which means that you'll be expecting a lower, but this could also have been a gap fill. So then I'll be expecting a lower to see what happens, but it doesn't do that. it creates a lower high. So now which gave this higher high, and it pulls back. So this exhaustion, you'll be expecting a higher high. You get a lower high though and a break of this low. However, this level here is the major level. So
Right. Well done. Yeah.
we buy it until that is broken. So you get a lot. So this creates a little bit of cell structure here. So it is overall by bias, but you have cell, what do you call it? Sentiment in the market.
Yeah.
So I would be waiting for a break of this high to continue with any buys, or if I see any structure forming before there. You don't really get much structure, but you get a break of the high, and now you're getting a slight exhaustion with some rejections, which means anywhere around this area is very contentious to look at around this area. And it was also pardon me?
What would you be looking for at that area, the lower area that you just mentioned?
Right here. Well, on a lower time frame, I can see this being a range. So I'll be looking for a break in either direction, really.
Mm-hmm.
This represents like a pause in the market, and it could break to either side. I would more look for a break above, because this level seems to be very strong right here.
Mm-hmm.
So it could reject and break above.
Yeah, very good. Okay, so Charlie, taking a look at this analysis, what's your thoughts on the pound right now?
More bullish than anything.
Okay.
I can see. I don't want to go from too far, but this is a type of brick wall that you mentioned.
Beautiful. Well done.
Low. You have this high into this lower low, higher low, sorry, and then a higher high. So you would be at some type of exhaustion between this level here, some type of exhaustion between these levels here.
Gorgeous. Well analyzed, Charlie. Now, in terms of the structure over here, right? Once the market's made this gap, filled the gap, and failed to make the new lower low, so making a new higher low and then breaking the structure, can I ask around this level here where we see, I forgot where all my tools are now. Where's my rectangle?
You just passed it. It's it right?
Yeah. In this around this area here, you think this is a prime area for a break and retest, even though you had the shift in the higher low, failed lower low, lower high, and then the lower low of this structure here, this short-term trend. Just to illustrate that for those that are not familiar with price action or new to the strategy, when you scale down, look at the trend that's tradable below the brick wall at this moment in time when the market is, well, okay, I guess it's not making the cleanest of lower lows, but point is the market's making lower lows and lower highs, creating the trend down. So in actual fact, this is drawn a bit wide on the higher time frames, but something like this, right?
Yeah.
But when the market's making these low lows and lower highs, we know that the shift in momentum is more bearish than it is bullish. Doesn't mean the structure is bearish, it just means the shift at this moment in time, sentiment at this moment in time is more bearish than bullish. Once price comes back into this level, Charlie, based on, let's say, a higher time frame analysis, which we know is a key level where price failed to break above for a very long period of time, breaks above, creates a level and comes back. Do you think this is a prime opportunity to look for a retest on any structure, regardless of just being the 4H?
Yeah.
Okay, so depending on the time frame that you trade, what would be your plan in order to trade off of this key level? Once you see the high has been made, you see that the lower low has been made, but you know that this is still the major high low that made the high. What would be your approach to here based on the time frame you trade?
You mean at this current time? So none of this has formed yet?
Not yet. So at this level here, these three candles here, the big bearish, the indecision, and the bullish candle.
Okay. So from here, I will scale down to a lower time frame after this candle has been formed. Mm-hmm. And I would look for the sentiment to change, where I can see some buy structure happening, mm-hmm. and then look for retests or double bottoms. Those are the two terms we really work with. Even if I stay with this time frame, I might not trade right here exactly, but then after I see this mm-hmm. happening with this break, then it's kind of signaling that the sentiment is changing back to buys. So then somewhere along this candle, I'll be looking for entries, retest. Maybe I might get a higher low in here or a retest on this same exact candle here.
Would it be wrong if somebody took the buy after this bullish candle closed at this key level?
No, because you're still bias really, and that's a retest level.
Correct. So if you took this buy and this failed, could you reason that you took the wrong trade because the lower high was formed, and now this could have potentially been the new lower high to go down? Could you reason like that, or would that be wrong reasoning with this structure?
It wouldn't be wrong, but I think that it's more in the advantage that it will go up from here more so than down. But it wouldn't necessarily be wrong, I don't think.
Yeah, it wouldn't be wrong, no. An absolutely good answer. I think the focus here is just to recognize there's a difference between trends and there's a difference between market sentiment at a specific time. And the lower high, lower low is a great opportunity to sell this market at this moment in time, especially when the market is creating intraday structures. So from a higher time frame perspective, when we look at this, we see this as a high. We expect the high and low, so multiple wick projections and then a bullish candle to the upside. We should anticipate that we're going to get the new higher high. But when we don't, and we see a break of structure, which creates an intraday structure, i.e. on the lower time frames, hourly, 30 minute, et cetera, we now see this as a sell structure market with a break and a retest. So if somebody wants to take a trade here, this is not incorrect at all, right? And this is really important for all of you to understand how the market moves. And I'm sure
on this time frame, right? Because sometimes this happens to me. If I took the trade here, would that have been wrong, or I would have just been unlucky that I would have gotten stopped out?
Well, what's the number one rule we need to be looking for, period, when taking a trade?
With rejections.
How many?
Multiple, so more than one. So that would have been too early. Yeah.
Okay, so, but the question is, it doesn't change the fact that you might have been stopped out. But the point is, just to make sure that we're being specific here, you wouldn't have entered on the first one, you probably would have entered on the second one, right?
Yeah.
Right, next question is, if you're planning to enter on the second one, do you enter with an instant execution or a stop order?
No, I think I would place my stop order closer to the wick of this one.
Okay, show me. Right. So now, even if you did place that trade, would you have been triggered in?
No.
And then once that price action made this fake out, stop loss hunt, whatever anybody wants to call it, it really doesn't matter. This is price action. It all means the same thing. Everyone just has different names. What would you have done? How would you have adjusted this, or what would have been your thought process at this moment?
I think stop loss would have been here, and I would have been looking to enter at the low of this candle.
I think I would have done the exact same thing. So you've answered your own question there, yeah?
Yeah.
All right, well done. So based on your analysis, we're looking at pound strength here. You can see the structure of the market is still following the brick wall, making higher highs and higher lows. It hasn't been violated. So in technical terms, we're looking for continued bullish structure. Take into account wick rejections from the left. We could be looking for a nice retest at this level. Now, what's wrong with this retest level being a Sunday?
Market make gap.
Correct. Now, if the market breaks below this retest level, does it void the buy structure?
No, the buy structure is only voided after here.
Correct. So now we'll take the higher low of the structure. We'll recognize this as a potential area for what pattern?
Double bottom.
And then in order to look for a potential retest, we can look at current structure here, of course, which is completely fine. But with the gaps, it's better to be safe and not sorry. I think the best plan of action for continued buys is to see price break a structure that hasn't broken above for a long time, indicated here by 12 hours of candle rejection. Wait for the break of structure to see price continuing that bullish sentiment, then look for potential retest and then a continuation. The next plan of action with this structure is to look for what we call a 50% retracement. So those using Fibonacci's would be looking for X number to price to return, but in terms of price action, we're just looking for price to retrace 50% of this previous structure. We'll look for a new form, higher low to form, to see if we have enough range back to this high. Okay, yes, we may expect the new higher high, but of course, it doesn't need to break the structure, so we'll look out for that. The final plan is if the market comes back down to the structure as a final area in the market to continue this bullish trend, we could be looking for a retest of this structure as part or in line with a double bottom pattern, and then looking for a continuation just back to these highs here. Now, if the market does pull back to this level, understand that it's going to be a real deep pullback with lower lows and lower highs forming, which could represent a new trend to the downside. So don't look to immediately buy off this level, just like Charlie mentioned. Wait for price to create the reactions, the rejections, the sentiment, and then look for the patterns once price starts to indicate or continue to indicate the structure that's been formed, okay? So do you agree with these plans, Charlie?
Yeah, I have one question. Sometimes when you're looking for the 50% retracement, sometimes there is an area in the market that's very close to like this high. Your 50% retracement might not be spot on, but is around this same area. So you just use that as confluence also?
No, we don't want to use any levels to the left as confluence.
Okay, not for 50% retracement.
No, not necessarily just 50%. It's just a phrase we use because that's what the market has done previously in the past. And if it's done it in the past, then the history usually repeats itself. Okay.
Yeah. So this is like you would call this like a 50% retracement too, right?
Exactly why I just got my rectangle ready just to show you. We could call this a 50%, but if we measure it, it probably isn't perfectly 50%. It's probably more of a 60%. But now I'm focused on this exhaustion to potentially indicate that higher low there.
So can you ask the question again?
What signals are we looking for?
We say rejection.
Correct.
Rejection or engulfing candles.
Correct. So engulfing candles represent what?
Bullish pressure.
Mm-hmm.
Change in momentum.
Yeah, and then what comes next after that?
The structure changes back to bullish, which is higher highs and higher lows.
Correct. Patterns.
Right.
Yeah. So that's the answer to your question.
Yeah. Okay.
Yeah.
Yeah, I agree.
All right. Nice analysis, Charlie, and just nice little chat there in terms of thought process. Little warm up, I call it, for the markets. Now, anybody trading going into the markets without thinking along these lines, you're going to have problems in the long run. It's very easy to take a trade. Anybody can take a trade and win a trade based on the fact that they think the market's trending and they found the retest level. But the thought process behind taking all of your trades is what's important. So the more you practice this, the better you become, the more consistency you can start seeing in your trading. And Charlie, that's my words to you. If you find that this is not the thought process you approach the markets with, then try to work on that in 2021, because I know when you come onto these sessions, you do an absolutely amazing job. And then when you jump on some of the mentors live Q&A sessions, I can hear some doubt. And I reckon a lot of that doubt is due to the fact that you may not approach your analysis the way you do on these live sessions. So something to think about. Okay.
Yeah, just be more consistent with how I analyze.
Correct.
And if it's not there, then just forget that period. If I can't see it clearly, just forget it for that time being.
Correct. And the demon of every trader is coming onto the charts and making up a story as to why there is a trading opportunity. That just boils down to too much knowledge. And obviously in life, knowledge is power, but in Forex is poison, right? When you come onto the charts, it's very easy to analyze this as being what at this stage, Charlie, right now, with your knowledge?
A range on a smaller time frame with rejections to the top, which means you could be looking for exhaustion from this level.
Correct. But the structure of the market is what?
Is bullish.
Correct. Now, rejections from this level means that you'll be getting into the market first, right?
Yeah.
Whereas the wick rejections at the top, with this illustrating a potential lower, higher multiple wick rejections here, you're adding confidence to your trades. But it's very easy to sell this as opposed to wait for this. Do you know what I mean?
Yeah.
Yeah. So it's very wise that we are able to make sure that we see the charts as clearly as we can, and without adding too much emphasis on just areas in the market where we think the market's going to do something, right? There are a lot of the times we can be right, but for the majority of the time, we will be wrong. And once you get into a spiral of trying to anticipate exhaustions, continuations, retests, breakouts, you find that's when all the problems are going to start to come. If your plan is to look for break and retest trades, look for pattern trades, look for structural trades, look for this trade, look for that trade, stick to it. Okay. Everybody needs a clear plan, 2 or 3 patterns to work with for the whole of 2021. one or two pairs to work with, depending on what timeframes you trade, and just stick to it. You will make money 1000% without a shadow of a doubt. Okay. It's just when you start to complicate things and you start to put too many things into the mix, you try to be too smart, you try to anticipate too much, that's when the problems are going to arise. So try to be consistent, as you said, Charlie, with your approach to the markets, and that consistency, whether it be one pattern or 10 patterns, will make you money, period. Do you understand?
Yeah.
So, Charlie, I wish you the best of 2021, bro. Thanks for coming forward to do this analysis.
All right, no problem.
Okay. Dips, you ready, bro?
Yeah, can you hear me?
Yeah. What pair do you want to trade?
Let's do EU.
EU, okay. So Dips, was you the one I dreamed about? Just make sure. Did I tell you about a dream I had last night?
Yeah, you sent the message across, didn't you?
Yeah.
Man, good message to wake up to.
Yeah. So just so everybody knows, last night I had a dream about Dips, right? And I was at home with my family, my wife and my son, and Dips came over just to drop by, and he had this envelope in his hand, and he gave me this envelope, and I opened it, and I asked him what this is, and he was like, "Just take a look." So I opened the envelope, and in the envelope there was 2 tickets. Now I couldn't, make out whether it was for baseball or whether it was for basketball. There was 2 tickets to go and watch a sports event, and both the tickets were $750 each. And I said to him, "Wow, what a gift! Thank you so much. What's this for?" And he turned around and he was like, "Rox, I've just hit my milestone of making $1 million in trading." And man, like, it was the most unbelievable feeling in my life in that dream. And I told my family, I told my wife, I was so excited. And then that dream just transitioned over to me in an office, and was working with loads of different traders and that, doing a session. And then I woke up to my son crying, but there you go. But it was an absolute amazing dream. The minute I woke up, I was like, I have to tell Dips what this dream was. And I just said to him, "Look, that's a sign, man. That's a sign there's great things to come. Whether you make $1 million or not, it's a sign that things are moving in the right direction, because clearly there must be something that Dips is doing in the community that I have seen, and then subconsciously I've thought about at some point in time, and then obviously ended up having a dream about him." So I know for a fact that if Dips continues to do what he's doing, that dream is coming true 1000%. It doesn't have to happen in 2021, but it's coming true. And I wanted to share that with him to give him some motivation to say, "Look, man, you're on the right path, keep going." So let's make it happen, Dips.
Amazing. Yeah, I appreciate that. Thank you. Okay, so just get the annotate. So this is a good pair because this is the pair that I tend to trade. So what we've seen recently last week is if we look to place brick wall, here we've seen bullish structure, high highs, high lows. More recently, the last couple of trading days, we saw this level here make this new higher high. We then seen price come back to this same level, failed to make another higher high. Actually, what we saw on Thursday afternoon is this massive bearish candle breaking through structure here, potentially breaking through a brick wall that we may choose to use. So also breaking through this level here, which made a previous high. So very much bearish sentiment in the market right now. So my plan would be as simple as this: let tonight play out. So I'm in the UK, so let the markets open, let my agent session does what it do, and potentially see if we get any sort of retracement back up. So we're in a massive push phase right here. Let's see if we get any retracement back up to here. So maybe that's 50% retracement up to here, to retest this level here that of structure that it's broken through. Would I jump in a sell if I woke up tomorrow morning and seen a retest here? Probably not. What I would then look to do is scale down to lower time frames, start to see that bearish structure being formed, and I'll look for my patterns such as double tops, for example, and potentially look to sell down to some of these lows down here. I know that's not great annotation.
No, it's amazing. It's amazing. It's amazing, bro. And let me tell you something. With everything that's been going on in the world right now, in terms of the pandemic, in terms of the US elections, and many, many more things, we have seen a lot of weakness in the dollar. And I think with what we see here on the chart right now, the question is, are we going to see a bounce back from the dollar? We certainly are seeing here a sign of that. It's not yet confirmed. And I think, as you just said here, in order to confirm this, we'll need to see the structure continue to develop with, sell-buy sentiment. So the break of this structure is definitely a sure sign that there's a lot of obviously bearish sentiment against the euro right now. We will need to check confidence with some of the other euro pairs here, but obviously there's a lot of bearish sentiment indicating potential dollar strength versus the euro. Okay, not a pound, just the euro right now. And what we'll be looking for on this pair, just to simply confirm that, because at the moment we wouldn't want to jump into buys immediately. We would want to see, after a strong push phase, how the pullback develops, and does it develop into multiple wick rejections at key levels, indicating what could be then a lower high, lower low, in order to then illustrate what could possibly develop in the near future, the new lower low. I think based on this analysis, there is not much else that we would be working with here, other than the simple fact that we are in a strong push phase based on the break of the structure. I think this is the first thing that I'd be looking for. And as you said, we'll wait for the markets to open, Asian session and every other session to develop, even into New York session, to see where the sentiment is across the board. Look for those confidences to then support why we should be selling the dollar versus the euro, as opposed to be looking for potential retest of structures for these continuation buys. We did have a nice break to the upside. High lows were formed, potential double bottoms were formed, but it wasn't sustainable. With the volume in this candle, it does look like this was news. So, this could be corrected. But as we said, unless we're clear on the direction and structure to work with, then we just wait for it to develop and then go from there. This is not about being right on this analysis. This is about getting an overall perspective of what we can see and what we can gather to help us with some of the other pairs. And if we are trading Euro USD, then the best plan of action is just to wait patiently. Okay. So I think I agree with this, Dips. Unless you have anything else to add, I think this will be the simple plan as of now.
Yeah, agree.
All right, perfect. Thank you for coming forward and taking a look at this one. Tobias, do we have you here?
Yeah, can you hear me?
We can, bro. How are you doing?
I'm fine, thank you. And you?
Yes, I'm very good, thank you. What pair would you like to take a look at?
You choose.
So let's take a look at Euro JPY.
Okay.
And what I'd like you to do with this one, Tobias, I'd like you to take the thoughts that we just took a look at on Euro USD, along with what's happening with Euro Yen, and try to find some confluence with the two pairs and figure out why we should be doing, whatever you think we should be doing with this pair.
Okay, I give my best.
Thank you.
So
you can annotate on the screens as well.
I begin here. So we can see the market opens with a gap here, and price cannot push up and break the higher high from before. And we're seeing we're in a consolidation, and price come back and bounce back here. And after a consolidation phase here, we pushed up and finally break this consolidation, but we break back into the consolidation, making coming back to this level and not to this level anymore. And the price is pushing up. We are again in this consolidation, and we bounce back to this level again. And then price didn't make it to this level from the consolidation, but forming a potential high low in this consolidation, because we can't get back to this level and price pushed up and broke this consolidation. Seeing here a rejection and going up again to this higher high. Price creating a higher low, but it pushed up and failed to break the higher high. And after that, it broke the potential higher low, coming back to this consolidation level and bounced back, creating a lower high here. And then we broke back into this consolidation level. And now I would wait for price to break one of this or this level and waiting for price to make something, maybe a potential break and retest to the upside or to the downside. Yeah, but I wouldn't do anything until this range is broken.
Okay, very good analysis. So based on your analysis, looking at how you dissected the actual range itself, okay, in terms of the higher lows and the higher highs and price not breaking structural lows and breaking structural highs, why would you see this as price still being in a range and not being tradable? If you can identify the behavior of the market, making new higher highs and higher lows and break some retest of structures within the range previously.
If you say that so, I would see a potential sell bias here, because we broke and retested. And maybe if you would anticipate a pause and go entry, you could take your sell stop here and your stop loss here. If you have enough range to this level, I would still consider this to go break even. You could sell this, but I think the price is so long in this range, and maybe this is just a slip out and break back in. And if I didn't have enough range to go break even, I don't risk my capital on.
Okay, very good
trade on this.
So I like that thought process. Now, one last question just for you to consider, okay, so that we don't become too entrapped by just looking at Euro JPY. What did we just see previously with Euro USD?
We're seeing that the price is going down, and we're seeing here the same thing.
Okay. What could that mean for Euro?
That is meaning that the Euro is strong, or is going to be strong.
So if with the Euro USD, we have USD pushing down, and with Euro Yen, we have Yen pushing down, not Euro pushing up. That means Euro be weak, right?
Oh, yeah, you're right.
Yeah, so the Euro be weak. Now, looking at the structure of the market, yes, we know it's broken back into the range, but in terms of how the market is forming right at this moment in time, we see more of a lower low, lower high formation being formed. We also see that price is violating structure, indicating strong bearish sentiment. And we also know, based on Euro USD, that it's doing exactly the same, which is indicating that the Euro is not strong here and the Euro is not strong here at this moment in time, meaning that there's a higher chance or probability that we will see more sell sentiment with both Euro USD and Euro Yen, and we will see buy sentiment. Based on that information, it doesn't mean that we are correct, because the market could have broken out of this range and broken back in, which means that the market is still reined in. And it can also mean that this is just a strong impulse move to the downside that could be corrected and continue up. But as traders, we're not here to be 100% right. We only need to be 30, 40, 50% right using a 1-to-3 risk-reward ratio to make a lot of money. So if the market sentiment at this moment in time is illustrating a lower low, lower high, breaker structure, indicating more sell bias, along with the confluence that we've seen with Euro USD, where do you think we're better off investing our money, if given the evidence? Buys or shorts?
For shorts, and I would potentially wait when I think there will be a gap, and maybe if I think there's no gap and the price is just continuing, this pullback here, weak rejections, and then a sell stop to the low, or maybe a creation of a new lower high, break, retest, and then going down, or maybe a double top continuation.
Good.
Something like this.
Good. Right. Now, let's say, because this is price action analysis, and I don't care what any trader, any mentor, any broker, any investment firm tells me, no one knows what the market is going to do next. Based on price action, based on past history, which repeats itself, and that's why we can trade as retail traders, if we see this as more bearish and we see confluence with Euro USD, and we take this trade as a sell based on a retest, a lower high, a double top, or a break of this major low here down around 25,900, if we take that trade and we're incorrect, or we take that trade and it loses, does that mean we was incorrect on our analysis? No, it doesn't.
No.
It just means it's part of our 100 trades, and within those 100 trades, we can and will lose 50, 60, 70% of them, depending on our ability to, be more patient, take higher probability setups, etc., etc. Besides that, point is, if we were to look for the retest, a lower high or a double top pattern to take a trade as part of this structure, the way it's forming and the behavior, whether it loses or not, we are not wrong. Even if this corrects and flies all the way to the upside, we're not wrong. Because if we take this trade 100 times and we lose 70% of them based on a strategy, or win 50% of them, 60% of them based on a strategy that is proven, guess what? We'll make money in the long run. Okay, so that's why we'll stick to more sell bias as opposed to looking for anything major right now. Even though it may not be as clear as like GU, we're still going to stick to buy bias because we've seen confluence, we've seen the structure, we understand the behavior, and we know what patterns we're looking for. And that's it. Does this make sense?
Yeah, of course.
Okay. Now, because we're intraday traders as opposed to, position traders where we'll be holding our trade for a very long period of time, we don't necessarily need the market to break this structure and retest. There is a range if price pulls back after a push phase and makes exhaustion to back down to the lows where we believe price will retest of around 75 pips. So even those trading the hourly time frame with a 20 pip stop loss, those trading the 30 minute with a 15 pip stop loss, those trading 15 minutes with a 10, 12 pip stop loss, 5 minutes with a 10 or 8 pip stop loss, or 1 minute with a 3 pip stop loss. There is enough range here to make money. We just need to find supporting evidence now, looking for the patterns and the processes in order to take a trade based on this structure. Until the market tells us otherwise, I think this is where we're at with all the confidences we have. Does this make sense?
Yeah, absolutely.
Very good. And that's the approach you need to go on with every piece of analysis that you do. You don't need to be right. You don't need to be 100% correct in the fact that the euro is weak. You don't need to be 100% correct that investors are putting their money back in a safe haven currency like the yen. You don't need to be correct that that the dollar is going to bounce back. No one cares. Do you understand? Well, no, actually, a lot of people do care because they feel that they need to be right all the time. But as price action traders, with the mindset that we want to have in order to, maintain consistency and profitability, we just need to make sure that we are keeping up with what's happening now so that we can take advantage of the movement. If we take the trade, it goes down slightly and we get taken out break even, it goes up, it doesn't mean we was wrong. Okay, we planned our trade, we traded our plan, it just didn't work out at that moment in time. If you do that over and over again, day in, day out, week in, week out, month in, month out, year in, year out, you'll make money. It's a simple process and formula to becoming a consistent trader. Everybody else just complicates it, always wants to be perfect and right. No such thing. So right now, sell by structure based on the behavior, based on price, breaking back into the consolidation. Yeah, what do you do? But the structure is more sell bias. We know it's in a push phase. Let's wait for the pullback exhaustion, look for those wick rejections, look for the momentum shifts, look for the patterns and processes, and then we'll look to set it back down to these lows. That's what makes sense, okay?
Yeah.
Okay. Thank you, Tobias, for coming forward. Charlie, what's your problem?
Yeah, question. Well, this is just in terms of confluence also. When you look at GU, we saw that it was bullish, which means that either the pound is strong or the dollar is weak, correct?
So, good question. So right now, at the moment, the pound is strong. We've identified that. Okay.
Right, that's what I was saying. So
let me break it down. Let me break it down.
Go ahead.
The pound is strong. Okay. It doesn't mean that the dollar is not strong or gaining strength. What we understand of this structure, just like I mentioned with Euro Yen, is this. We may see this as buy bias, but this may end up ranging. This may end up going sell bias because the dollar becomes super strong. But at this moment in time, based on this analysis, without trying to be too smart, overanalyze, or predict too far into the future, the structure is buy bias, so that's what we work with from a price action perspective. On Monday, Tuesday, Wednesday, we start to gather more information with regards to the dollar, the strength of the pound, the gain in strength of the dollar, etc., etc. And then we make an informed decision. The dollar is really strong. We're starting to see weakness with the pound across the board. Even though this is buy bias structure, maybe it's time just to hold back for a minute, wait to see how the structure develops. Instead of taking a higher low trade that could develop into a lower high, let's wait for price to create a double bottom to confirm evidence and confirmation, and then look for a buy. Or you wait for the higher low to form, a new high to form, and then a break of that structure to then look for continued momentum. Okay. Now, even if the dollar is strong, it doesn't necessarily mean that the pound will be weak. Even if the euro is weak versus the dollar. Do you understand?
Yeah.
More often than not, if two currencies are strong versus each other, you'll see the market range. If one is much stronger than the other, then you'll see it go up or down. And if you see that the dollar is strong versus a euro, it just means that maybe the dollar is strong, not as strong as a pound, but it just means that the euro is probably super weak. Does that make sense? Look at euro Aussie dollar.
Right.
In the dollar. Does that make sense? And now this is an absolute art in itself to be able to gather this information as a price action trader. Look at this week or last week with the pound. How many times, and be honest, how many times did some of you right now in this live session believe that the pound was going to tank? How many times did that cross your mind? Even if you didn't take sales, how many of you did that cross your mind? The pound just kept grinding and grinding and grinding and grinding. There was no weakness in the pound. And what we usually say on a Sunday/Monday is this. If you can gather a bias of a currency strength without having to look at any strength meters that lag and only go, strengthen once prices move, if you can gather that the euro is weak and it continues to remain weak through Monday and Tuesday, you could almost be sure, unless there is some major news or economic crisis that happens, that the euro will be weak on Wednesday, Thursday, and Friday. With that information in mind, you should not be anticipating any reversals, any sort of structural change other than simply waiting patiently for the market to develop a sell or buy opportunity versus the euro. And once you can gather that information, I'm telling you now, the amount of confidence is going to give you to take your trades, and discipline is going to instill in you to take your trades during your trading week is going to be absolutely insane. But you must also understand that just because the dollar may be strong, it doesn't mean it's going to be strong across the whole board. It could just mean that the euro is a lot weaker than everything else right now. Does this make sense?
Yeah.
Why did you sound hesitant?
No. My phone was on mute, so I had to unmute it first. But I was just thinking how interesting it is that we could gather evidence that the euro is potentially weak just from looking at a pound US pair, a pair that doesn't even involve euro, but because it involves US, when you look at euro US, you could still gather evidence of the strength of the euro using a pair that doesn't even involve euro.
Yeah. But the pairs that we have looked at have involved the euro. Euro-USD.
Right. I mean, eventually you go back to that pair that involves euro, but you gather confluence from a pair that doesn't even involve euro because it involves US.
Yes.
And then you use euro-US to gather the confluence. I just thought that was interesting.
Yeah. And what you should all be doing in the mornings when you're doing your analysis is you should make sure that when you're doing your analysis, you have pound, you have euro, you have USD, because these are the only pairs currencies that really matter. And then just as I have now on a piece of paper next to me, I have strength for now going into tomorrow, weakness for now going into tomorrow, and strength for now going into tomorrow. And I have that on a piece of paper next to me, and I'll make sure I'll put that in my diary, my journal. So going into tomorrow, this is what I know. If the markets continue to illustrate these behaviors for me, then it doesn't matter what pair I trade, whether I trade New Zealand dollar, whether I trade Aussie dollar, whether I trade any of those pairs, because these are the main currencies that the pairs or cross pairs currencies are traded against, you can be sure that if the euro is definitely weak, I can sell this. I can sell this. I can sell this. Do you understand? If the pound is showing strength, I can buy. I can buy. You know, I can buy. Now look here. Euro New Zealand dollar is strong versus the euro, but versus the pound, I mean, it's done all right. Maybe not the funnest example, but you get the point. But why is that? Well, we didn't even need to look at those other pairs to gather information. We could already see that there is a sentiment of euro weakness. Now, if you go and check the news, you will see why the euro is weak. But I don't want to bring fundamentals into my trading today. We will focus on a lot of that next year. And I'll help all of you to understand how to do that. But as of now, from a price action perspective, we can gather the euro is weak. Okay. Now, it doesn't mean that the markets won't open, guys, and the euro will gain immense strength and rocket to the upside. But we don't care about that because we weren't doing our analysis to be right. We were doing our analysis to get a directional bias so we can potentially plan our trade for the future. If the markets rocket to the upside, then we just change our bias. It's simple. Do you understand? We're not getting paid to be analysts here or be economists. We're here just to do what we can to give us a slight edge in the markets. And our slight edge right now is to identify that, guess what? The euro is potentially showing weakness. Okay? So that's the analysis on this pair. Now, we have been on the session for quite some time now. So personally, I feel what we're going to do is we're going to take the knowledge and everything else that we've have heard and listened to today from myself and other members, and we're going to call it a day. In terms of the other pairs, I will be with you tomorrow morning at 7 a.m. To do a live breakdown on the other pairs. We'll be able to gauge what the markets are doing to a degree because of the gaps, and then how the gaps are filled through the Asian session into the London session. And we'll take a look at these 10 pairs and get a bias of what we could be looking for tomorrow. So as of now, I just want to wish everybody a great Sunday. Be back tomorrow morning at 7 a.m. bright and early. In terms of just concluding this session with you all today, I think I'll talk about this more tomorrow. Actually, I think I will talk about this more tomorrow. But yes, as of now, everybody, enjoy the rest of your Sunday. I hope you've enjoyed the session. We've had a nice little warm up here. It's going to get busy from tomorrow, so make sure you enjoy the rest of your rest. And until next time, take care for now. Bye-bye.